Hello everybody, welcome to TraderMerlin Show. It is your Thursday edition, getting near the tail end. Fun day out there in the markets today. Lots of action, lots of movement, even some great economic news, which the markets just kind of said, yeah, I don't really care about that news today. Let's tank. Anyway, good to see you, Jimmy T, Dana. We got Joe here as well. Chris, as one of these days, keep your eye out for a 66 Chevelle. That's my car. Keep your eyes open. You find one, let me know. I'll just commission you to repair that thing for me one of these days. I got to get one day. Alex, good to see you. Lisa, Tibor, Rob across the pond, good to see you, mate. We got Rob C and Rob L. Obviously, we've got David Rostakor, Tom as well. We got a big crew today. I must have done something right because the show is starting off with more people than normal. And good to see you, Les, Eric as well. If I forgot you, Gary, there you are. We got Kenny. Oh, I could run through the whole show and do everybody. Giselle as well. All right. So let's, Marcus has traded SQQQ today and went to the bank. Great day for it. Great day for it. And I'm glad you got out because, I hope you got out because you saw what happened after hours with Apple. That may pop the markets a little bit tomorrow. So let's just start things off. I want to start off with some of the economic data simply because I think it's interesting to see the talk track by Jerome Powell and the Fed basically saying, look, economy's doing really good. We see growth. We see economy doing well, GDP growth. We see stable employment markets. And, of course, that's their fallback to make sure that everything is rosy from their perspective. And I've kind of been making fun of them for, pumping so much money into the economy. Everything I learned in my finance degree tells me that this is all going to end very badly when you basically print that much money out of thin air. To me, that's going to create a problem. So I love the graphic I chose today. I kind of made this one up. It says, stimulus steroids. You can use a little syringe there of economic stimulus. Hopefully I spelled everything right. I tend to make some spelling mistakes. Injecting into the markets and into GDP. I will show you those numbers that happened today. Here is, I'll start with the GDP numbers. As you can see on the screen there, not shabby. It basically beat all expectations I had. There's your advanced GDP up near the top. You can see that they're expecting 5.3%. That's an increase over that 2.3%. We came out at 6.9. I should probably draw some spikes around this thing, like just make it really dramatic. I mean, that's just crazy. 6.9%. That's like China was a few years ago. I mean, hell, we could be at double digits soon. Now, that's a result of many different things, but as I'm watching this chess game unfold, and the big chess game right now is what's the Fed going to do with regards to rates? As of yesterday, last night, you could actually look at the Fed funds futures and see that they were pricing in 5 interest rate increases based off the statement that was made on Wednesday. Now, I still think you're going to get 4, but if we continue to see good economic data like this GDP number that's much better than expected, and I'll show you a chart here in just a second, then that would obviously help the Fed in their argument that, we don't need to raise rates like as aggressively as may be thought before, right? I mean, they can, but they don't need to. Now, why would they want to raise rates aggressively? Well, obviously to stem inflation. But as long as economic growth is still in place, they can raise them as quickly as they like. So I thought this was a rather interesting number today. What was surprising for me is kind of how it looks historically. Here are some charts so you can see what this looks like. I have GDP. This is advanced GDP, which is kind of their first reading and the most important one in the eye of the Feds. You can see going all the way back into 2000, we really didn't ever get above 7. I mean, one little dabble back in 2003. Other than that, it's pretty much stayed underneath it. And we have been above 7%. Let's see, how many times? 1, 2, and we were at 6.9 today. I'm leading one to believe that we'll see a higher reading next month or next quarter. All in all, this again is very good for the economy. It just gives this picture like we're firing on all cylinders. But again, it's kind of like having somebody who is really laid back and chill and just doesn't do anything. It's sloth, right? You take a sloth and you inject enough crystal meth or speed into that guy's body, he'll run as fast as a cheetah. And I think that that's the analogy I'm making for our markets is we're still in somewhat of a sloth situation, in my opinion. Yes, we're getting better and things do look good, but 6.9% GDP growth, that seems a bit crazy for the U.S. We're usually nowhere near those types of levels, and obviously that sounds great on paper. See how it all pans out near the end. But yes, the sloth taking crystal meth, that's where we are right now. That's the U.S. in a nutshell. All right, so that was your major piece of economic data, as you can see on here. There were some other pieces that were okay, in line with expectations. You see the unemployment claims came out right in line at 260,000. Pending home sales had a much sharper decline than I anticipated. I really didn't think that pending home sales would be sliding. I actually thought they'd be moving upward and looking better because people scrambling to get loans and buy. Tom, how do you know about sloths and meths? I watch a lot of nature programs and a lot of drug shows, so I just combined the two, Tom. That's it. I watched The Planet. There's all kinds of great shows out there. Anyway, you look at the pending home sales. We just looked at the new home sales yesterday, and the new home sales looked good, much better than expected. Now, not exactly sure why that is, but it was definitely a contrast because new home sales were looking much better than expected, and pending home sales much worse than expected, according to the data that came out today. That's not good. Obviously, the more the people are scrambling to buy homes, that means more money pumping into the economy. That means more growth. So if those start to slow down, then this could be a drag on things. So, these are all those little chess pieces lining up, trying to paint a picture of what is, really happening with our economy. One other piece here that is noteworthy is durable goods. You can see here this one slipped. It was 2.6. They expected to drop to 0.6. Came out at negative 0.9, which, these are big ticket items. It could be a lot of electronics, TVs, appliances, which of course could still be impacted by the chip issue and supply issues and port issues. So those numbers will probably spike back up. I guess I could show you that number if you wanted right now. If you'd like to look at the core durable goods orders, we can bring those up as well, but that really isn't as exciting for me as the GDP numbers that came out today. All right, on the other side of things, let's talk about earnings real quick. So we had yesterday Microsoft's earnings sent the markets reeling. We can bring up some charts on that as well. Here's what we had for today. Earnings announcements. You had Apple, Visa, MasterCard, Altria, or Philip Morris, as they changed their name because they're embarrassed that they're a tobacco company. Western Digital, McDonald's, which is, I saw you guys sent some really funny stuff in about Elon Musk and McDonald's. We had some fun with that one yesterday. Blackstone Group, Valero Energy, and Northrop Grumman. You notice almost everybody on this list beat. You can see that right here. The only one that really missed was conveniently McDonald's. They missed on their earnings, but everybody else beat significantly, although the results for the day were very, very mixed. Western Digital down almost 14%, and you had Blackstone Group up almost 7%, so some wild, wild swings. Which brings us to one that hasn't officially, or I guess they just officially released their numbers. And of course, we are referencing the great Apple, which beat earnings by 11%. And here is their chart. This is Apple on a daily, but right now you can see in the post market, it's up here at 166. So this will be a positive factor for anybody who's long the markets right now. Let's go to a 5 minute. You can see there's their earnings pop. Nice beat on earnings. And, even though they beat earnings, you just never know which way these damn things are going to go. But this one responding rather positively to that earnings announcement on a 5 minute. So for those of you with Apple shares, you will most likely end up with a nice little bump in your Apple shares tomorrow, which, of course, it being the major component of the S&P, the NASDAQ, and the Dow, well, you could see those indexes pop as well. Lori, I kind of came up with that analogy on the fly, or otherwise I probably would have tried to have had the needle injecting the sloth, and I would have put a name tag that says U.S. economy and then show them doing 60 miles an hour on the road. Would a lot of that GDP be replenishing inventory that may not be? Yes, I think so. I think a lot of it's just catching up, right, filling shelves. And of course, it's also for us as well, because GDP is goods and services. So, what are we producing? Well, if we produce a whole bunch of stuff but couldn't send it anywhere, that doesn't help us. So we had to cut back on production. But now all of a sudden, maybe we're seeing an increase because of ports opening up, more tankers available. Who knows what the scenario? But yes, I do think that is a big factor to it, is the ports and shipping situation and replenishing shelves. Yes, Rob, I did see Hood after hours. I love it. I love it. I love it. I love it. Why? Because so many people are so bullish on Hood. Most of them are the traders of Robinhood. So here is Hood. Down it actually has bounced a lot. It was down under $10 here just a few minutes ago. We are right now at $10.39, but it goes back to the daily chart. I mean, look at the chart of Hood. The trend is your friend to the bend at the end. I mean, how can you not want to go short on Hood? And at some point, I will tell you this, at some point, someone's going to buy Hood. Someone's going to come in there and say, you know what, your assets are worth more than whatever, X amount of dollars per share. We could probably look at something like book value and see what the actual, I don't know if I can still get that on Yahoo, but that's, you know, one metric that people like to look at and see what's it really worth. If you were to sell all of the assets, what would it be worth? And unfortunately, Robinhood doesn't have a tremendous amount of assets. Its assets are the customers that they have. So let me see if I can get that data for you guys just to give an idea. That should be under financials or key metric. Basic for taxes. No, not there. Statistics. They actually closed a lot of this off. Yahoo started charging for some of these statistics. So let me see. There you go. Price to book 1.5. So still, you get a price to book ratio of 1. That is basically, if they sold it right now, it'd be worth its assets. So it's pretty darn close. 1.59 is the price to book ratio. And to put that in perspective, let's look at something like Apple. Actually, General Motors would probably be a good one too. You know, price to book. So they're 42 times, the current price is 42 times their assets, right? That's right now with Apple. Or you look at something like General Motors, which has a lot of assets and physical plants. Price to book 1.69. That's still relatively low. Relatively low. Yeah, definitely a question for Larry. I'm not the financial fundamentals guy I used to be, but nah, I don't care about that stuff anymore. I feel like fundamentals take way too long to cook to the bottom line, and it's too easy to manipulate. Gary says, Gordon Gekko. Yes, one of the best quotes ever. Greed is good. Greed is right. Greed works. Oh, what a great line. 8.5 book value at Zacks for Hood. Interesting. PayPal's going to acquire Hood? No. Why would PayPal? It'll be another financial firm or somebody trying to get into the financial firm. You know, it would be kind of interesting to see some. I know this sounds like a stretch, but why not have somebody like Coinbase acquire? Oops, I don't know why I started that. Who knows why I clicked the intro button? It would be interesting to have somebody like Coinbase buy them. Why? Well, because Robinhood has a lot of crypto. They're a younger demographic, and you know, why not try to bring in more of those clients to your platform where you're doing active crypto trading? You know, that would be a logical target. Of course, any of the financial firms, your Schwabs, your Ameritrades, and that type of thing would be a good acquisition target for the database. So, who knows how it all going to pan out? But yeah, I love the chart. Yeah, Rob, you sent me the picture. I didn't get a chance to look at it. Sorry, I did not. Didn't get a chance to. Yes, I know, Lori. It is one of the 7 deadly sins. We won't talk about the other 6. So, all right. Let me keep going here. So, I'm going to go through a couple of different stocks that people have asked about. Cliff was asking about Teradyne, which is in the chip making industry, and obviously chips have done extremely well. It's been one of the catalysts to lead this market for the past couple of years. But of course, what goes up must come down at a certain point. Just if I joined late, why the title of today's show? The title of today's show is because they printed trillions and trillions and trillions of dollars to help get this market on track, and it's been somewhat working, and all of a sudden we have this huge GDP number, which to me is inflated because of all the money being put in, and of course there's other factors there, but you know, when you look, I know you guys probably hate me for my horrible analogies, but one of the positive things of steroids is physique, right? If you work out using steroids, you get to be nice and buffed, you get to look all nice and good, etc., 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 and much more appealing. And of course, the way society is, that's a good thing to be all ripped and chiseled, etc., etc. Just ask Arnold Schwarzenegger. However, the more steroids you do, let's just say certain body parts of the man will shrink up. Yeah, where we are as a country. We've inflated a lot of our economic numbers to make ourselves look puffy and better, and certainly to the American people, you and me, make ourselves look better because the data looks good, but we might be giving up something in that, and you know, something might be shrinking up and not working like it should, and to me, that is why I'd use the steroid analogy for today. So there you go. I know it might not be appropriate, but you know what? I just, I'm weird, and you guys know it. Isn't Apple gapping into a supply zone? Well, it's running into a zone, so we can look and see specifically. You know, this is one of the great things for like tomorrow morning. If you look at where it's at right now, let's go to that 5-minute chart. So you look where it's at right now, and I'll put a line right across this just to that's the peak. It was 167. and you scroll back here and you look and say, all right, well, it is a small little supply zone. I wouldn't call that anything very strong. Certainly for me, I like to go out and look at the dailies and use that as my reference point. And from there, I don't really see it gapping up into anything on the daily time frame. Maybe we switch to a 4-hour time frame and look for something a little bit better. I don't see anything that's really that great as far as a supply zone for this one. I'm taking off the extended hours trading. So there you go. I guess you could call this on a 4-hour time frame, a little bit of hesitation before this big sell-off. So, if you are looking at this as a shorting opportunity, which I think overall probably would, if I was forced to go long or go short tomorrow in the open for Apple, I would probably look at buying some puts. The premium will have dropped out of the puts because prices spiked up so much. You got a 4% gap up if it gaps up at current prices, maybe a little bit higher. So I think the odds are better in your favor of going short on it. But again, anything can happen out there, so be really careful. Trading earnings is obviously very, very dangerous. Let's see. Let me go to this question from CliK on Teradyne. So we could look at things like XLK or SMH, which is a semiconductor ETF. The question from CliK was, I've owned Teradyne for a couple of years. Now with some big profit, it has been falling for 3 weeks. I don't know what to do at this point. Well, if you've owned it for years, this is, again, I say this to everybody who comes on and asks a question about a security. Why'd you get into it? If you got into it, you've got to know why or where to get out of it. I mean, if you walk into any situation, you should always be thinking about how you're going to get out or when you're going to get out. So what was your profit target to begin with? If you said you've been in for a couple of years, I've owned it for a couple of years now, I mean, you've got some serious profit. Let's first off look at SMH, just so we can get a perspective of what's going on. SMH, for those who don't know, is a semiconductors ETF. All right? Yeah, it's true, right? Big up. Everything's been falling for 3 weeks. Well, let's look at the price comparison relative to the overall market of Teradyne. So at a certain point, regardless of what you own, you need to be thinking about taking some profit. So this is going back almost 4 years on semiconductors. Huge move. Of course, the real gist of this move started at the bottom here right around March 19th of 2020, right? And to go all the way to the peak, you have about a 237% gain in semiconductors in that period of time. Awesome, right? 237. And right now, it's fallen to the tune of about 24%. Okay, sure. Now let's go look at Teradyne. So Teradyne, oh man, slaughtered today, buddy. If you go from the same point to peak, 292. So this one's doing better than the semiconductor index, and this is, again, one of the materials companies for semiconductors. So it gained 292%. From a relative strength perspective, this was much stronger than the semiconductors and the overall market, right? So this is something you got to be careful with. I'm sure you were loving it. If you said you've owned it for a couple years, I don't know when you bought this, but it had to be somewhere under $100, which means you're well over double your profit. Great. Now the challenge is, what do you do now? I mean, it was selling off fairly aggressively from peak to trough, down 65%. Right? So the market has fallen, 20%? Sorry, not 20%. Semiconductors had fallen 25%. This has fallen 23% until this morning, and now down another 22% today. At this point, it's clear that you're in a painful situation. You have a massive loss on your hand, or at least a loss of profits, right? This is a huge gap down today. I'm assuming earnings. I didn't see them on the earnings counter, but I'm going to make an assumption that this was an earnings announcement. Some of you may look at the candle today and say, oh, we have a hammer formation. We're into demand. Yes, we are. But he's got to do something here. You can't just sit on a position and think it's going to go up forever, right? So first thing I would say is forget about what's happened the last couple of weeks. At some point, you have to tell yourself, here's where I'm going to get out. If it drops X amount, and this is how I generally do my long-term investments. Larry does them very different, right? Larry is looking at the fundamentals, and he will stay in them forever until the fundamentals prove him wrong. And maybe that's what you're doing, Cliff. I don't do that. I'm a chicken. I don't trust the fundamentals either. So for me, I would be moving my stop loss up as price went up. So I would probably have been out, if we bought this lows in March, I would have been out on this big pullback here or this pullback here. So my trading style does not sustain big pullbacks. That said, your trading style shouldn't sustain a pullback like this either. So if I was in your shoes and you still are suffering and haven't gotten out yet, I'd put a stop loss below the low of today. All right, the low of today on Teradyne was 139.91. Or sorry, was 139? Let me reread that one. 102.51. So if you get below 102, take whatever profit you had, call it a day. You gave back, unfortunately, a tremendous amount of profit on this one. I mean, it was up at 170. Now it's bouncing off 100. Terra beat earnings, but 2022 guidance sucked. Oh, man. Isn't that funny? You beat earnings, and you're thinking, this is going to be great. This stock's going to go to the moon. And all of a sudden, wah, wah. That's why I don't mess with earnings at all. But, keep your eye on this one. I'm not a huge fan. Don't really usually trade Teradyne. However, this is a hammer formation, and I guarantee you have climactic volume. Let's throw volume on there. Look at the volume spike today. Huge. Its average volume is about 1 million, maybe a little less than 1 million, right around 1 million. And today we had volume of 17 million. So clearly some pain point out there for anybody holding Teradyne, and I'm sure, Cliff, you're hurting as well. So I would be careful on this one. I'd set those two numbers, and this is me personally. Of course, not financial advice. It's just how I would trade it if I was in your situation. I don't want to give back all the profits. So anything below 102, I'm going to unload it and be frustrated that I gave back 70 points worth of profit, but knowing I'll take something home. Number two is if it does rally up above 112, I may actually look at buying into it and adding to a position. But you got to be careful there because this could have a little bit of a rally and come right back down. Remember, the overwhelming trajectory of financial markets right now is down. Right? Overwhelming down. So be careful if you're going long. You're definitely going to be going counter trend here. It seems like the market, when you look at some of these prices that have happened over the past couple of days, just can't seem to get the engine revving back up. I'm going to leave these graphics on here because hopefully in the next week or two, it will have met some of these red lines, and I can get my inverted head or my head and shoulders pattern and look for a short, which will be able to capitalize on a big move to the south side. But right now, things are looking relatively weak. Alvin says, Merlin, have you ever had a 50% loss in your experience? Oh, yeah. They suck, man. I've never blown an account, so I've never gone to zero. Actually, that's not true. I haven't personally blown an account, but I've been in 2 automated bots. So, you guys know there's all these robots that you can buy and algos you can buy into with a subscription fee. So there was 2 I've done over the years that were futures-based, and they had great track records of performance. I was like, okay, put 10 grand in those things, and it's just going to sit there and generate me money, and I have to do nothing? Pfft, sounds great. Both of those not only went to zero, but one of them actually went negative until I threatened litigation there. Oh, well, we'll waive the losses. I'm like, yeah, I'm not going to lose more than I invested in this thing. And basically they just churn and burn your account. So I've blown those accounts, but that's my own stupidity for buying a bot to manage it. I have lost 80% overnight on a trade. Can you guess what industry or sector that's in? So I was going over to... I was over in Europe. I was actually on an airplane over to Europe, and I was short. This was so long ago, I can't even tell you the name of the company. But it was some biotech firm. And it was trading at like $20. And, I'm short this thing. It looked horrible. The company looked awful. The financials were awful. It had a horrible product. They had one product. And some crazy thing, it came out with a new product, and all of a sudden they got FDA like phase 2 drug approval, and the thing jumped like 400% on me. And luckily I wasn't fully but I lost 80% of my portfolio that day in just a gap up. So the plane lands, I get to the university and log in, I'm just like, oh my God, where did all my money go? Yeah, which is why I don't touch biotech or pharmaceuticals, right? Pharma for sloths, yeah. If you look at how you and I develop as humans, as characters, as citizens of the world, we're driven by things that have personally happened to us, right? There's the old thought that, racism, you're not born a racist. It's your upbringing and your surroundings that makes you a racist. And for me, I am racist towards biotechs and pharmaceuticals because of what's happened in my trading world. It's my experience with them has just been almost entirely negative with biotech stocks, which is why it's not in my trading plan. And I'm sure many of you have a lot of similar experience with certain stocks. Just ignore those stocks, move on, be better for it. Let's see. I bought puts 2 on Tesla just before earnings, largely in part to the thing. Oh boy, Kenny. If you've ever heard Boston Run, well, cool. I'm glad that worked for you, but I would highly recommend not buying puts direct right before earnings, right? Because the premium you paid is so elevated. So if you bought puts on Tesla, what happens is you might be right. It may have gapped down significantly, but it has to go past a certain point for you to break even. Even if you're right, you have to be really right. But yeah, Tesla, congrats. And hey, I'll never turn down an offer for some beers. Absolutely. Drinks on you. You're done. I'm noted, Kenny. You're in. You're on the hook. Let's look at Tesla. Yes. Tesla tanking. Part of it. And no, this isn't because of the General Motors thing, right? This is just Tesla. I think just, their earnings weren't that bad. Their earnings seemed okay. But yeah, down right now, down another 11.55%. Great. Tank, Tesla. Tank. What do I think about 1-to-1 reward to risk ratio for Alvin? I'm not a fan. So here's why. That's a great question. I know that OTA really focuses on 3-to-1 reward to risk ratio, and I firmly believe that you should go with 3 or higher. Here's why. If you go first off, let me start by saying that the vast majority of people who are in the financial markets have a problem accepting a loss and taking that loss when they're supposed to. Period. If you look at the way that people trade, normally they are guilty of taking very small winners and letting the losers run. So if you have that formula that your losses are small and your winners are big and you go 1-to-1, odds are you're going to blow your account over time. So if you plan everything out, which to me is the key to success in this, is saying, look, I know I'm going to be trying to make $3 for every dollar I lose. That way, you can fail 66% of the time and only be right 33% of the time and still break even, if not maybe even make more money. If you're doing 1-to-1, you have to have a much higher success rate to break even. So that's the reason I wouldn't recommend doing 1-to-1. I know people who do. Good for them. I'm good for anybody else who wants to do that. I wouldn't even do scalping at 1-to-1. Right? Anytime you even open, remember your definition of scalping is different than mine. Scalping is sitting on the bid, buying on the bid side, offering out on the ask, and scalping the difference between the bid and the ask. That's scalping. Scalping is you're slicing right in front of everybody. Today, in today's market, scalping means, the way that people perceive it is scalping is going for just a few pennies or nickels at a time. It's not capturing the spread anymore. It's looking for very short-term momentum. So from there, 1-to-1, I still wouldn't do it. I still wouldn't go 1-to-1, but that's just my experience. You're gonna strike out too much, and unfortunately, you let 1 or 2 bad trades get away from you, and it just kills you. So I would go for at least 2-to-1, maybe 3. Buy the high, sell the low. You're going the wrong way there, bud. Buy the low, sell the high. Musk lost over $20 billion. Yeah, I'm sure he'll be fine, Michael. I'm sure he will be absolutely fine. All right, there was a question before Alvin's. Opinions on Goldman. Are you asking as the stock or the company? I think that they are the largest. Organized crime is not the right word, but they're the largest fraternity in the world. This is, if you want to be a financial kingpin or entrenched in the financial world, to me, it's Goldman Sachs. Goldman's over the place, and I'm sure that's helping Goldman Sachs. That said, what about the price chart? Well, there we go. My analysis of Goldman is the same it is for pretty much every chart right now, right? What do you guys think is happening here? You can draw on some moving averages here if you want, or trend lines. We've broken below moving averages. We've broken below trend lines. We've broken below demand zones, right? I'll just map things out. Okay, you've got some demand zones that were broken right there. You've got a longer period moving average, which we have broken. That's your 200. You were well below your 20-period moving average. You're probably just bounced off a Bollinger Band. Yeah, you just bounced off a Bollinger Band, which is positive, but still, all these different indicators which are on this chart are all pointing to the south side. And for me, the most important one is we broke down here below this demand zone right around 373. So, where's it headed? Well, you had a logical bounce back here because this little tiny area of demand that goes back to April of 2021. But if we get down below call it 320, there's some unfilled gaps, and it would not surprise me if we got all the way down here, all the way down to $275, right? It doesn't look good, right, Lisa? Oh, I'll tell you a funny story. I know sometimes it just you're like, why am I even watching this show? So I was in New York for a trade show once, and we met these two it was with a buddy of mine, and he's Mr. Talker, Mr. Socialite. We met these stunningly beautiful women. So we offered to buy them drinks. We'd take them. I didn't know where to go. And the one that I was with goes, well, let's go to this it was the W Hotel. And she's like, yeah, it's just kind of the happening spot in New York City right now. Great. So we go to the W, and they started asking us what we do, yada, yada. And I was telling, I'm in the financial markets, and I trade, and I teach. And so they were asking, what's the elite? What's the upper echelon? What would be the thing you aspire to be? I said, well, working for Goldman Sachs would be probably the creme de la creme in the financial world, especially an executive at Goldman Sachs. I mean, an executive at Goldman Sachs, their bonus is more than any of you make here in a year in their salary. That's just their bonus. I mean, these guys are making tens of millions of dollars in bonuses. It's crazy. So we told her this whole story about Goldman Sachs and kind of a background history. So all of a sudden, these two guys sit down at the table behind us, and the girl that I was with turns around and starts talking to these two guys and asking what they did. And they're like, oh, well, we're in the financial markets. And the guy's ask her, what do you do? And she goes, oh, I work for Goldman Sachs. And I'm like, oh, no, here we go. She's totally BS these guys. So she starts interacting with these two dudes, completely telling them and selling these guys that she works at Goldman Sachs, yada, yada, yada. And the best part was, 3/4 of the way through the conversation, the guy pulls out, he goes, what department are you in? And she's like, oh, she made up some super department. He pulls out his card, and he goes, I don't know you from the company, but you should stop by my office sometime. And he had a Goldman Sachs card. It was great. It was absolutely great. What did Tom say? The robot is... What? What? All right. Sorry. We will talk about a random show. This feels like a Friday show, I tell you. It's just, and I'm not drinking at all. All right, so we got the Teradyne cliff. It looks ugly. Chips are looking pretty bad as well. This one's for Tom because he's here. Unfortunately, it's not the answer that Tom is going to want to hear. He says, what are some typical characteristics of a down move? What is the common range for a pullback time until the bottom is hit and time to recover? Also, how do the major indexes react, specifically the S&P, the NASDAQ, and the Russell? Whew. Alvin, not only did I lose her, I didn't want it. I was done with that. She was just looking for the Goldman Sachs card anyway, so that's not my type of girl. So let me answer this in a couple different ways here, Tom. Number one is I'm going to start at the bottom. How do the major market indexes react, specifically S&P, NASDAQ, and Russell? Generally, it's going to be the technology pieces and the small caps. So, for example, if we look at our charts and look at the rollover, Russell has historically been... Let me take this off. Again, we've talked about this many times. Russell has historically been the canary in the coal mine. When markets are bullish and looking good, Russell usually leads. When markets are looking bad and selling off, the Russell usually leads to the downside. So if we go from the peak to the trough here as far as percentage moves, the Russell, again, normally will have a bigger decline. So if I was shorting these markets, I'd actually be looking to short the Russell. And let me go to where we're at right now. So you're looking at a slide of about 22% for the Russell. Okay, NASDAQ usually is second, but I think it's changed over the years because of the dependency on technology. Again, I'm going to go from the same peak here, which is the high point, down to the lows, and NASDAQ's only down 18. Next from there, the Goldman digger, yes. Next from there, I would say you have the S&P. The Dow, for some reason, at least in my experience, is like the muted one of the three or of the four. All right, so S&P I would say would generally be the next biggest decliner during the market sell-off or a market sell-off. And what do we have now? You've only got 12.43. So we've gone from Russell, which is down 22, okay, 22, to the NASDAQ, which is down 18, to the S&P. This to me is absolutely lockstep with what I expect during a market sell-off. Okay, no problem, Iron King. Glad to have you. And then lastly, since I do have the Dow futures here, this to me is usually the one that moves the least in these market moves. Now, let's see if that's actually true. Yep, 10.36. So right now, everything is lining up, in my opinion, exactly how it should for market sell-off. Russell's leading, Nasdaq's right on its heels, followed by the S&P and then the Dow. So that's how I expect them to react, right? So if all of a sudden you see the Russell really start to rip back up and have break a downtrend and start moving to the upside, then that may signal a reversal. But I think that we are still so high on the curve that we're due for a much bigger correction here overall. The second part of your question is what is the common range for a pullback time until the bottom is hit and time to recover? That I can't answer. I don't know. That's beyond. I don't look at time durations. Somebody like Jeff Manson actually spends a lot of time looking at that stuff and like, oh, it'll move down for 11 days or something like that. I don't know. That's something I just don't know. And then the first one there was, what are some of the typical characteristics of a down move? I look for something very simple. And, to me, there's an attitude to the market. And there's a phrase you guys have all heard said, 3 steps forward, 2 steps back, right? It's impulse and correction. It's really all it boils down to. So if I go over here, and I think I got this question the other day, what is an impulse and a corrective move? Well, let me go into teaching mode here and see if I can show you. Let's see, we are right there. Add a new slide. And we'll change that to, there we go. Okay, so now I can do this. So for me, it's a combination of speed, power, and conviction, right? Those are the kind of the elements I'm looking for with regards to trends up or down. So obviously an impulse and a corrective phase are the components that drive markets. So you've got your impulse is the strong move to the upside, and a correction is the smaller retracement of that move. Normally, the correction's a smaller move and maybe not as sharp. So it could look something like this as well. There's your impulse and then, a correction like that. Fine. So in these situations, all we're doing is just trying to identify where is a demand zone that this may pull back to, and use that as a buy point to join into the trend. That's the genesis of impulse and corrective phases. So if you look at a downtrend, same thing. I'm looking for the speed, the power, the momentum to be south side, and the retracements are now smaller. So my impulses are down and my corrections are up. When that happens, which I think we're in a phase now, I'm just simply looking for supply zones to sell into, right? And you guys saw my picture I had on the what was that? On the Nasdaq, S&P, or I think it was the S&P actually. I'm looking for that bounce back up to supply, sell down, and expecting it to come down to this dotted line. And when it happens, maybe a little bit of a bounce and another break, right? So those are the characteristics. Well, if that works for you, work that Dow in there. But that's all I'm really looking for a trend reversal is where is the momentum? And all we've been seeing are impulse moves to the downside. There really has not been much of an impulse move to the upside on any of these markets. I mean, just take a peek at the charts. Here's your Dow. Show me a strong impulse move to the upside. There really aren't that many. Right here, you can start at the very top, right? Going back to January 4th. Impulse is down, small correction up. You start at January 13th. Massive impulse down, correction up, right? Well, that's the situation we're in. The impulse wins here. You can see back here we had impulse up, correction down, impulse up. So, these just simple, I guess, segments are what I'm looking for. And I know you got some Elliott Wave people here who love Elliott Wave. I'm not a fan, but remember, all Elliott Wave does. Let me see if I can erase all this stuff here. Oh boy. All right, so there's your impulse and correction. And I hope you're still here, Tom. Hopefully that helps. Elliott Wave basically it uses what I just mentioned, which is impulse and corrective phases. So here's impulse, correction. Elliott Wave says after this, you're going to get another impulse, correction, and another impulse, correction. And from there, you get a correction and an impulse. That is Elliott Wave. You've got a 1. Oh, what just happened? What is going on here? Okay, let me draw it all again. Boom, boom, boom. That is Elliott Wave. Okay, so you can go 2, 3, 4, 5, and then this is your A, your B, and your C. Right? And then the belief is this whole thing starts all over again. Impulse, correction, impulse. That's Elliott Wave in a nutshell. Saved you all a ton of money. Don't buy any books on Elliott Wave. You're just going to waste your time. In a downtrend, what about an impulse that starts like this? Right? You've got your impulse down, correction. There's 1, 2, 3, 4, 5, A, B, C. It's the exact same thing, just upside down. Yes, 3 is the longest usually, correct. But again, Margaret, if I'm in a situation where I'm buying this pullback right here, and I'm saying, oh, the 3 is coming, I don't usually think about it as, oh, this has to be the longest. I'm just anticipating this bouncing out of demand zone in an uptrend off an impulse and correction. I'm riding this for whatever it's worth, right? If this one's really short, fine. If it's really long, great. I'll ride as long as I can, but don't hang your hat on, oh, it has to be, the longest leg of the thing. All right, let's see. What else do I got here? Any idea when we can use CliK in Forex? I don't know. What is the platform use? I used Oanda, but my spot markets, I haven't really done much with spots. Really, the only Forex trading I've been doing has been with futures. So, Oanda was the one that I had, but not really using it. Let's see. What's the highest risk do you risk per any one trade, Merlin, percentage-wise? I don't have a rule on that. I think when you do it long enough and you've done it for so many years, you know yourself, you know how much risk you can take. I don't look at it percentages anymore. Back then I would say probably 10% when I was still figuring things out. Now, I'll risk a lot more than that. Not really risk it because I'll put more than, I'll put 50% of my capital on a trade. That sounds crazy by any normal metric, but I'm also defining the risk. So yes, I can put a large amount of money on as long as I know exactly how much I'm risking. So that's the main thing for me is the downside here. Not, oh, I'm risking X percentage. It's I need to know the exact amount I'm going to risk, and then I can put as much money on it as I want as long as the risk management is in place. Let's see, Merlin. Can you take a look at EPAM? Larry J has mentioned it. Oh, really? At EPAM? I don't remember this one. EPAM's, oh goodness, that is a dive. And this is the thing. I love bringing Larry on because this is where you really have to analyze your style. Like, I couldn't do this. I could not sit in EPAM and watch it go from 700 down to 430. I can't. I just cannot do it. It's not my thing. But with Larry, right, he was talking about he's looking at a price target at a certain value that's probably much higher than this. Now, big market corrections, and this is where I think it's great to have Larry on the show so you guys can watch what he's doing. To me, this is ugly. Something's broken here with EPAM. No idea what they do. I haven't heard him mention that. But what I think is interesting is if we can maybe get Larry on to share his portfolio, his watch list, I would make a note of every single one of those. Every single one of them. And, if he was still willing to hold it long at 700, what does that mean for me as someone looking to jump in at 430? You're right down near this area of demand. I think you're actually a little bit below it right now, but, came into this demand area. This might be a good buy point. Granted, I'm not buying anything. I'm not buying a lot. I'm buying very little because I think we're headed even lower. So there's that one. He's also got SWKS. Right, Skyworks, that one sold off from 200 down to 140. What was the other one? LYV. Oh gosh, I can't stand Live Nation. Live Nation actually doing pretty good. Still going, man, unbelievable. What were some of the other ones? Invisalign. What's Invisalign? I forget. And let's see if that's under stocks. I don't remember the ticker symbol for Invisalign. Let me see. Or is it Visalign? It's Invisalign? Unfortunately, I can't think of what the ticker symbol was for Invisalign. He was all hot on Invisalign as well. Nvidia, right? A lot of these have really taken a beating. If you liked Nvidia at 340, you love it at 220, and you're really going to like it at 120. So I think Align. Thank you. There you go. Thanks, Miles. This one has been crushed as well. It was up at 750, now it's down at 450. So, if you're value investors and you've got somebody like Larry who's really taking a look at all the fundamentals, some of these may present some good buying opportunities if those fundamentals still hold. I think that fundamentally, no pun intended, these markets are changing as we speak. So I would be very difficult to be holding. There you go, Mike. Yep. At some of these levels. Yeah. So that's all it is. Shopify, right? Shopify, what a great call that was. And that was really because of COVID. But again, this thing's down over 50%. It was at almost 1,800. Now it's at 815. Ouch. HGY. No. Horizons Gold Yield ETF? Facebook, I am still short Facebook. I still got that one. And that, I don't remember some of these. But, everything's down. And if your thoughts are that in the future that these are going to be great buys and great fundamentals, good for you. But I would hold off, personally. I don't think we want to put too much capital on the long side of things right now. Just be cautious. Not to say that this is not done, not to say we can't hit all-time highs. I mean, we still aren't like dead in the water. But I think we'd all agree, and we've talked about this many times, just this move alone from 2020 lows to where we're at deserves a pullback. And then if you look at the monthly and go back to where this origin started, we are long overdue for a pullback. So be careful with the long side of things. Gair, thank you so much. I appreciate it. Yeah, it's fun. Hey, I like a venue where I get to talk about these things, and I appreciate that you guys come here every day. I know you have a lot of other things that you could rather be doing, but hopefully we get some out of it. Yeah, I help you out with some of the things that you're doing as well. So there we go. Options expired on Friday. Does the price action usually happen on Thursdays or Friday? Both. Usually Fridays where you get the really wonky, strange moves, right? And we saw that last Friday. There were some crazy moves last Friday. But yeah. Shopify just made my put shopping list. Yeah, look at that chart. It's beautiful. Let me, this is a monthly. This has been a horrific month. Oh, why can't? A horrific month for Shopify. I mean, goodness gracious. The daily is just off the charts, but I'm dumb. Thanks, folks. I'm here all day. Yeah. All these big tech stocks getting cut in half, and maybe more, Drew. Maybe more. I still think you got some more. Big F said, I sold the 195 NVIDIA February 18 puts. Don't mind owning there. I agree with you. I wouldn't mind owning 195 either. You still got some room to get there, but your point, you're right at this demand spot. You're slightly below it. Fine. Yeah, you got a month for it. As long as you collect some premium too. And because the way this has been selling off, the premium for that put was probably pretty darn good. All right, I rambled on long today, so let me go into what's happening tomorrow, and then I gotta go. I gotta run again. Here is what we've got cooking for mañana. There still are earnings coming out, and there's some big names again. Caterpillar tomorrow. We got a couple big oil companies with Phillips 66 and Chevron. You've got Synchrony Financial and Colgate-Palmolive. That's right. No shortage of people getting toothpaste out there. And then on the economic announcements, I think tomorrow's the biggest day of the week, other than Wednesday's Fed announcement, which was absolutely telegraphed. You have right here the core PCE price index happening at 5:30 in the morning. Right now, expectations are it's going to be exactly where it was before. Okay, cool. If it is, markets shouldn't have much of a reaction. If it's higher than this, even if it's just 0.6, you could see the markets start to tank a little bit. If we get some real outlier, like let's say 0.7 or 0.8, well, then I think you're in a really bad spot for the Fed. I mean, the markets will probably react sharply, but I think that everyone's hinging on what the inflation numbers are, and that's that core PCE price index that you see on the screen. Coming out, personal income, apparently they're expecting to increase, and spending they're expecting to drop significantly. That's great for America. Save more, buy less, spend less. That's a recipe for getting out of debt in a hurry. So those numbers come out tomorrow, and then you can see you do have a couple of other, Germany preliminary GDP, you have Italian bonds, but that's not that major of a deal. So keep your eyes open. 30 minutes before the markets open, you will have that core PCE price index, and things will be bouncing all over the place. Not to mention, you've got your Apple shares to think about and how that might impact the markets. It is creeping back up right now. Let me go to your 15-minute time frame so you guys can see it. Here is Apple right now, stretching, trying to get back to those highs we saw, which come right back on a supply level, and that may make for a decent shorting opportunity in tomorrow's opening session. All right, what else I got? Do you use RSI to figure out if things are oversold? No, I do not. I look at price. I mean, there's really nothing else that you really need to look at. It's price, right? That's how you tell if something's overbought or oversold. Relative, when you look at a move like this big sell-off here, I'll do the hard red edge right there. I don't need RSI to tell me that this thing is oversold. I don't need stochastics or Bollinger Band to tell me. I know it pierced its lower Bollinger Band. I know it's below its 20-period moving average. I know it's oversold on stochastics, right? So these are easy things for me to figure out. Let's see, Bollinger Band. Oh, look at that. Surprise, surprise. It broke its lower Bollinger Band. So I think the longer that you look at price charts, and again, for those that might be learning technical analysis, I'll give you a real simple tool that will help you dramatically, is pick up give me any chart, really. How strong do you feel the uptrend of RDSA is? Okay, I haven't looked at RDSA, so RDSA. I'm not going to put any indicators on here. Oh, this one's really kind of ugly, but I will tell you that according to relative strength, it's going to be in an overbought situation. According to stochastics, it's going to be overbought. Bollinger Band, it's not going to be, it's going to be hugging the top of the line. I don't think it's going to be out yet. So what I always do is draw a picture in your mind of what it's going to look like, and then add the indicator to see. Yeah, so it's hugging the top of the upper Bollinger. Didn't think it would break it yet just because of the acceleration. How about moving averages, right? It's going to be well above its 200-period moving average. Well above it. And it's going to be above its 20-period moving average. How do I know? Because it's only sold off 4 days and it's still trending up. So, these are, you can quiz yourself kind of how these indicators work. Now, you ask, how do you feel about the uptrend of RDSA? It looks good. I hate this bad print. This bad print sucks. And it skews everything. So you really have to tweak charts. So if I can get rid of that print, I think it looks pretty good. Let me see if I can get more data in here. I mean, if I just look at this right here, higher highs, higher lows, yeah, it looks good. I mean, I wouldn't want to buy right now, but I'd certainly be more apt to buy a pullback in this one. So again, anybody who'd want to learn more about technicals, don't hang your hat on them. I don't even, you notice most of the time, I don't even have them on the charts. It's because my brain has been conditioned, having looked at these charts for 25 plus years. I've looked at millions of charts, and your brain will tell you what they look like or where the indicator should be. For example, what's another one that I normally don't look at? I don't know. You guys got a weird random ticker symbol for me to analyze? Maybe someone that you haven't heard at all? It took me a year of reading charts, a select few books. Well, yeah, I think as long as you understand what the indicators are and how they're calculated, then it's very easy. You can look at a price chart and go, okay, I know exactly how this indicator is going to read this data, so let me read it. Okay, so WY, you're Weyerhaeuser, right? WY? Yep. Okay, good, another good one. So what's going to be happening here? Well, it's not going to be oversold on stochastics because it's off the lows. It is not going to be outside its lower Bollinger Band, and I can tell you, we'll just throw that right there. It's right near it, but it's not outside of it. It's going to be below its 20-period moving average for sure, because the 20-period moving average should be right around here. There's your 20-period moving average. Nailed it. The 200-period moving average, this one's a little trickier, right? Because you remember, you've got all these historical candles here. You go at 200, my guess is that it's going to be 200. But just do this with all the different indicators. It's fun. It's a game. You kind of just test yourself and see how correct you are. Let me get these moving averages up. I'll do one more and then I got to wrap up. I can't do an hour show. Big Ab won't like that. Just so you guys know, Big Ab has emailed me and he says, do not do 1 hour shows. We don't like it. Okay, come on. Come on, Chris Hutt. What indicator do you want to know, man? This one's easy. It's below its 50, it's 200, it's 20-period moving average. It is oversold on stochastics, and it's because of this last bounce, this 3-day bounce right here, it is right on its lower Bollinger line, if not slightly outside, but I think it's right on it. Oh, right on it. Okay, pretty close. What are your thoughts on Netflix and Bill Ackman buying 3.1 million shares? I think Ackman's a smart dude. I think he's very smart, right? So we look at NFLX. I think Ackman's probably in a decent spot. Netflix at 360, most of us are hooked on it, right? We know what Netflix is, the utility it provides us. it's most of our go-tos now. You know, we sit at home and watch TV and video. So it's Hulu, it's Netflix, and these types of things. You know, buying 3.1 million shares, that's a massive investment. But big picture, let's go to the weekly. You know, it doesn't say what his price that he bought at, but you know, right now, if he bought it at 386, it's still actually relatively high. To be honest, you know, this is a weekly, but it could Netflix fall down to 250? It could, but it's a staple, right? Netflix isn't not going anywhere. I think we're all pretty much addicted to it. Oh, and Tommy wanted to look at Netflix from that perspective. Let's go to the daily. My last one. Yeah, this one's hard to figure out. You know it's oversold. You know it's outside its... actually, it's not outside its lower Bollinger Bands. This candle here on the 24th of January pushed it outside its lower Bollinger Band, but it's subsequently, because of today, it's back inside of it. There you go. I said because of today, it's back inside. Notice the other ones are still outside. Today it went back in. Again, it's just looking and watching these things forever. Wood for Rob. Wood, timber ETF, huh? Oh, well, I can't do my Bollinger prediction. But you know it's going to be below its 20-period moving average. It's probably going to be below. The 200 might be. It's pretty flat for the last 200. All right? Yeah, it's pretty flat. So, you know, we're down below that. If you look at RSI and stochastics, RSI may actually tell you it's close to being oversold. Unfortunately, I don't think it'll let me add on another indicator because I don't subscribe. Let's just go out on RSI since I know we got RSI levers here. Yeah, I have to pay, so I ain't doing that. Anyway, that's it. He's been buying the dip. Probably, and you know, there's actually a cool place you guys can find out. I think it's called, Guru Focus. I've shown this one to you before. If you go to Guru Focus, you can actually type in Ackman. There's gurus on here, and you can see Ackman right there. So it tells you a lot about it, and then you can see his most recent acquisitions. And here's his top stock picks. Surprised I don't see Netflix on there. But you can see his top 12, according to 13F document he has to file, it'll tell you his holdings. But I don't see Netflix on here. He's got Agilent, Domino's Pizza, restaurant brands. He's thinking foods, which is very different for him. All right, that's going to do it for me, everybody. I'm going to get out of here just a minute shy of a 1-hour show. So again, for those of you who have comments, feedback, suggestions, things you want me to cover, email me, TraderMerlin@gmail.com. If you are new, hit that subscribe button. And yeah, tomorrow we should have Don Fron on the program. I'll reach out to him after the show, but hopefully we'll have Don Fron. We can get his thoughts on some of these markets and where things are headed. But anyway, there you go. Hope you guys learned something today. Have a fantastic day tomorrow. Be careful for that core PCE price index number, and I'll see you guys in about 23 hours. Cheers.